Hi, everyone. This is Jackie Cooper with Crypto Mom 2 talk show, as well as the Blockchain Legal Institute talk show. And I would like everyone to remember to like and subscribe to these shows because we have some wonderful speakers on board and in the queue, and I don't want you to miss anything. I have been really excited about having my guest on today because of the fact that his expertise is international. And he happens to be based in the US, so he has that knowledge as well. But we are connected through a Telegram group that is internationally dealing with DAOs and a lot of other topics. And so his experience is really something that you should think about tapping into. So, how are you doing today? Welcome.
I'm welcome. I'm doing well. Thank you, Jackie.
Yeah. So, where are you currently based? And explain a little bit more about how you got into the blockchain world, because as everyone knows who's listened to the talk show, I'm all about stories. So I really want to find out more about your journey, and then we're going to talk a little bit about taxes and accounting. But I will have to just say for everyone who's listening, this is not legal advice, not financial advice, not tax advice. We're talking in generalities, and anything that you do based upon our conversation, you do at your own risk.
Okay, so
So anyway, what's your story? How did you come here?
yeah, so to address the first question, my name is Cameron Browne. I'm out of Santa Barbara, California. I have been an investor in this space since 2015. I started doing, I guess, working with cryptocurrency taxation, reconciliation back in 2017 through my first practice. But the real, I guess, genesis of really operating full time in this area was I got stuck together back during DeFi summer with a good friend, colleagues. This is back in the pandemic. I was playing around on Uniswap, somehow got the Uniswap airdrop, and I was going, you know, how the heck is this taxed from a US perspective? What does this mean? What even is this in the first place? And I said, if I'm asking these questions as a CPA, trading around, understanding, a brief knowledge of cryptocurrency, I'm pretty sure that 99% of Americans have the same question. We've got a business baby, and then we decided to go full time. So I launched Darian back in 2021 with my good friend, and haven't looked back ever since.
Well, you've used some vocabulary, and even though there are individuals who are very crypto savvy who follow me, there are some that are brand new. So
Yep.
you talk about airdrop. For those that don't know what an airdrop is, can you explain? And you bring up a really interesting point, because another friend of mine, I was on a Telegram group with her. Well, actually, it was a Zoom, but it was through Telegram. And she had talked about how her airdrop was worth $3,000. And all I kept thinking about is, are you declaring that? How is it
Yeah.
taxed? And is it, if you don't move it, is that a taxable event? Again, I don't want you to give tax advice here, but what is an airdrop? Explain first that.
Yeah. So an airdrop is generally just like a project or a blockchain or an organization will send you cryptocurrency tokens, and it's generally related to your participations or activities with that project. So in the case of myself, I was using a decentralized exchange, Uniswap. I was trading, I was lending money to them, I was swapping. So I was using the overall protocol or software application. And for my early participation, they sent me Uniswap tokens as a gift for saying, hey, thanks for being part of it. So airdrops are quite common when people decide to work with betas or pre-mainnet or pre-launch. They're used to usually incentivize the community to participate and saying, hey, thanks for helping us out early on, or early stage investors or whatnot too.
Yeah, so one of the things that I just want to mention, and you might be able to give some, advice on this. Sometimes there can be fake airdrops, and so you do have to be careful about that. And I know I was talking to my friend yesterday about that, and so there are sites that you can actually go to make sure that it's not, a fraud. Do you ever face that, or have you experienced that before?
Yeah, unfortunately, I mean, myself personally, no, because I generally like if I get something, I'm generally expecting it, or I've been through my activities or my space, or my, I guess what I've been doing. But I have seen clients where they'll get like, hey, I got dropped these tokens, and they follow it, they trade with it on Uniswap, it'll drain their wallet or sushi swap, whatever that be, through a bad contract. So it's very important to one, check, look at the contract, look what was sent to you. If it's something that a lot of our, I guess, nefarious actors will try to use to bait people in and then scam or hack their wallets. So being quite careful what you're actually claiming. Unfortunately, it was less Wild West back when I got my first ones going on, but more and more commonplace, today.
Yeah, so again, I'm just mentioning that because sometimes what looks too good to be true might be too good to be true. So definitely
Yeah.
check that out. So I know that you have you're experienced in the crypto side. Have you seen certain trends related to like either the IRS or the tax codes generically, with respect to either crypto activity or taxes or things like that? Because you've been in the space for a while.
Yeah, I mean, since I've started this in 2017, we've kind of moved away from like the Wild West of like report what you can, or we don't need to report, or if it's all on chain, who gives a darn? And starting here in 2025, exchanges, Coinbase, Kraken included, will be sending over data just like your Schwab or Fidelity account will be. I'd also say there's been more of, I guess, a growing up across the board with like reporting softwares. We've even seen the past 3 years at the firm of our tools have gotten more capable. So tracking decentralized finance, tracking staking activities, different chains, different wallets, different exchanges, it's gotten a lot better. And that's just on the general compliance side. From the IRS perspective, I most recently met Consensus, which was a conference back in Austin here at the end of May. Met some of the enforcement team, also met some of their even criminal enforcement, general enforcement, and they tend to take like I'd say right now a hands off and just a waiting. There's a lot of like regulatory uncertainty with the ETFs and are these commodities or are they securities? So the IRS is focusing all their efforts on is just like unreporting. So yeah, if you've made money or you've gotten, an actor in the space, definitely they're going to come after you don't report your taxes. But when it comes to like more complex events like, liquidity mining or DeFi or staking, they're tiptoeing just because they're just as unsure as we are. Even though they have sent out guidance, FAQs dictating what they think these transactions should be treated. But they're ultimately waiting for other parties to help them decide that process.
So you mentioned something that's really interesting, and it was brought up when I spoke with another person a few months ago about the 2025 reporting.
Mhm.
I don't know if I want to call it a requirement or a direction. Um, I have a Coinbase wallet, and I have every week I have a little bit of Bitcoin that I have dropped into there. I'm hodling it. I'm not moving it. And so my concern about report, and now you also mentioned decentralized exchanges versus
Yep.
centralized exchanges. And so for those that are listening that don't know the difference, the centralized exchange is Coinbase. But my question is, and that's where you KYC. In a decentralized exchange, from my understanding, it hasn't changed. You do not have
Yep.
to KYC. And for
Mhm.
those that don't know, KYC is know your customer or, the consumer. So that means that I would say I'm from the United States or whatever the requirements are. Um, so if they are sharing information, my concern and question is if I'm simply keeping it there, I'm not doing any trading. Uh, I'm simply using it as a savings account.
Yeah.
Again, everyone who's listening, this is not tax advice. I'm just asking. Would that trigger something from the IRS, or should it trigger something? And the other question that I have, and this is the conversation I had with this person a few months ago, which I was kind of miffed to be not at her, but just at the IRS. And sorry, IRS, it's just truth. On the 1040 or wherever they have
Mhm.
changed the language of it over the past 4 years. So initially
Mhm.
when they said, do you have anything? And again, I'm not quoting exact language. There was like a gray area of how you possibly could interpret that. And then they kept tweaking the language. So it made it more that you needed to say if you were holding or if you were selling. But again, I don't have the language in front of me, so I can't look. And yes, I have the law background, but again, I don't want to, giving legal advice. What's your take on this? Again, from the idea
Yeah.
that now they're going to, and I heard that she said that they might be sending out these letters to people saying you might have penalties because you did not report. But if you did not know that you had to report, then it becomes a really gray area as to why would I owe penalties if I didn't think at that point, based upon the interpretation, why don't they just grandfather everyone in?
Yeah, why don't we just make it easy? So what you're alluding to, Jackie, is on the 21, 22, and the subsequent returns, there was like a check the box. They've moved it around. They've actually moved it up to 1040 now, to get a little bit more compliance. Is like it essentially boils down to, did you acquire, purchase, trade, exchange, or digital asset or cryptocurrencies? And that's meant to be like, if you do that and you don't check it, by virtue of signing your return as an American taxpayer and citizen, you've just committed perjury. So it's meant to kind of just, in those cases, it's just like kind of an assurance. So if you did receive it, check the box. Now, if you didn't sell or have any reportable activities, yeah, nothing needs to be going on the 8949. No income is declared. If you're just buying, hodling, etc., there's no taxable event. But you did acquire or purchase cryptocurrency, and therefore should check the box. And the reason why we suggest that you should always, especially if in doubt, is if you decide not to, you're giving the IRS essentially top of, or basically a free, oh, I'm sorry, I'm like a blank slate essentially to go back into your return to review it, and then that just jeopardizes the term, or basically can make the audit a bit more severe. So if you did acquire, check the box. You never tax event. That's okay. You don't need to report anything. But if you did, acquire and lied in your return, that just gives them the essentially the right to investigate those certain years. So making sure you're compliant is very important.
For sure. And the reason why I bring this up is not everyone uses an accountant or a CPA, and you sometimes do it yourself and you don't read all the times, just like how many people actually read the terms and
Yeah.
conditions. You click yes when you open up a media account. So definitely for anyone who's new, know that on the centralized exchanges, they're going to be sharing, which means that when the IRS does an audit, they're going to see that you were on a centralized exchange. And, they might not see on the decentralized, but again, that's, who knows what's coming down the pike in terms of the laws.
Yeah. And I
You,
would say
yeah,
I
go
would say
ahead.
it's very analogous to like back when we were doing like sales tax reporting, economic nexus with Wayf in lieu of Wayfair versus South Dakota, is that people didn't report sales tax, but Amazon, Shopify, eBay were saying all these things. The states got this data, they knew there was something there, and they come out and audit, and they make assumptions, they do discovery findings and discovery audits. So it's better to at least ascertain. It's the same thing when you're going through customs. Is like, did you acquire, fruit or something abroad? Well, if you don't, no, but if you did, like say yes, just to be on the safe side, even if it's, maybe a small piece of banana. But it's those little things like that you want to be, I guess, overly compliant, because if you say no and they find out you lied, auditors don't like when you lie.
Yeah, yeah, and ignorance is not an excuse.
Not anymore.
Um, so you've mentioned, the idea of DAOs, and that's always intrigued me in terms of, and as many people know that I write the Bitcoin Cinderella books, and one of the topics that's coming up, and after I finish these next two, will be Bitcoin Cinderella and a DAO book, because it fascinates me in terms of the governance and also because of how many there are in the world. So DAOs are, for those that don't know, are, I guess they're a group of people that come together for a purpose. They might be incorporated, they might not be incorporated, but they can have tokens, utility tokens, they can have a treasury. So how should DAOs, what are some of the questions that DAOs might need to think about if someone is so inspired to create one, and then all of a sudden they realize, okay, I have all this now what?
Yeah. I mean, a DAO is it's an organization. It's a group of people
Yeah.
coming together. I mean, the real world, like fiat, brick and mortar version of that is a partnership or a corporation, or it's a group and amalgamation or a nonprofit. A DAO is just a digital way of doing that. People are collecting through token, their participation, communicating online, and doing something for some good. And again, I won't hold myself out to be an attorney, but when people come together with the expectation of making profit, by default, the IRS or other agencies will consider that a partnership, and therefore just a general partnership, which opens people up to limit or basically unlimited liability. So it's important for DAOs, organizations out that have come together, If they have a for-profit incentive, is to look at some sort of wrapper. So actually, how Jackie and I got connected through is a wrapper service called MyDAO or the Marshall Islands. Um, there's various versions of this here in the States. There's Wyoming, there's Delaware. I think there's something, there's Catawba. They're trying to do similar types of structures. And then the classic Cayman, BVI foundations to hold those DAOs. If you're in a nonprofit manner, I mean, there's 501c3, so nonprofit organizations, there's tax exempt organizations, so your 501c4s. So once you have like the overall mission, again, when money is there, it makes a difference. So if you've got the money to spend, to incorporate, but if you're only 20, you got a small collective of people like, hey, we're going to raise money and go buy a pizza or throw an event each year at ETH Denver, this conference. Like, yeah, you probably don't need a legal wrapper, but if you're looking to issue a token, have broader participation, interact with the public, thinking about where you incorporate, how you incorporate, and what fashion do you incorporate and set up that structure is very, very important because that all influences how we treat this from the tax perspective.
Yeah, no, do you have many DAO clients?
Quite a few actually. So we see a lot of like proto DAO or early stage where they might be a development company or a labs entity. Hey, we want to build XYZ product and then we want to DAO it or launch it later for our token. So we work with a lot of early stage founders on that and navigating the right structure, the right jurisdiction, generally in tandem with counsel, based upon their own risks or goals or aims with the organization. And on the flip side, we do a lot of work with existing DAOs. So we do accounting and tax compliance for on-chain organizations. We may work with some of their contributors or participants, contractors, employees on their recipients or token compensation, managing their tax impacts and planning. So basically the full circle of it, yeah, we see DAOs from early stage, late stage, all in between.
So what has been the most interesting area that you've had to learn to help with, considering taxes? Is staking one of the areas? Or, I
Yeah.
mean, there's so many new innovations. What has been, I know that you're a very creative individual. So what has really kind of been intriguing from an intellectual perspective?
I mean, I got my start in decentralized finance. We joke like to tell our calls DeFi degens, so trading all across the board, experimenting with different smart contracts and protocols, and really just kind of satisfying that curiosity of how to chase return and money. So I'd say that's where it's kind of had my work from where get the creative juices going. It's understanding at the protocol, the contract, the transactional level. Sometimes it's not just a simple staking event. It's how you're staking or with whom you're staking, or are you have the ability to restake or compound, or is it locked up? And all these different little flavors, these certain tax events, which may be very simple in a traditional a trad fi or traditional finance environment of interest. You lend money to bank pays you interest, taxable income. But in the case of, decentralized finance or staking, you can put your tokens up and lend your tokens to the chain to participate in governance. You can lend them to a project. They may be locked up. There may be restrictions. You can take your interest analogous to staking and do certain things with it. So that's where we spend a lot of our time as an organization is understanding these. In addition to is people that are receiving these token awards but the thing is with those is we can point back to existing stuff with stock options, stock awards, restricted stock units, which there is analogies for. But I'd say like where we spend, like I said, a lot of our time is on decentralized finance, on-chain activities, bridging, wrapping, lending, the people that get a little bit weird with their money. But it also helps people support their making investments, providing liquidity, and overall increasing the space.
So I know when I first started, there are certain online platforms that help you if you're buying crypto to kind of, I guess the best word is aggregate the transaction. So you can kind of download to share with your accountant in terms of,
Mhm.
whatever you've done. Um, I can mention names, but I won't. But
I will.
do you use those type of platforms? Do you find, I've heard from different people that sometimes they are not always accurate. And so I wanted to get your take on how either tools that people should be thinking about, or if
Yeah.
they use the tools, how do they know if it's accurate or not, especially if they're doing their own taxes? What do
Yeah.
you recommend?
We just have a lot of really good spreadsheets. No, jokes aside, we a lot of macros, VBAs, all that jazz. No, there's quite a few tools out there. I would say over the past 2 to 3 years, there's been a consolidation. Also, tools just kind of died back, and they've gotten overall better. And I think I mean, ones that I've seen that are generally better, not tax nor software advice, is from the more like accountant heavy transaction, more technical, has been either cointracking.info, which is what we use. We also use Crypto Tax Calculator. It's a fantastic software out of Australia. Um, and then awaken.tax, which is a little more kind of like retail focused, less, for the, like, again, less for accountants, but very, very good in the usability side of things. And a lot of other, I've seen Coinly is pretty good. There's Coin Tracker. But it really is, there's quite a few knives in the drawer. So it depends on your activities, which chains they support, which exchanges you're on. What are you looking for as far as like tax lots? Do you view staking as taxable or not? Does a tool incorporate that? Are you, when you're providing liquidity, is that a taxable event? So certain tools have certain ways to accommodate that, track it. They may rely upon machine learning. Maybe it takes a little more elbow grease. I will say that generally, though, with all this is financial accounting, tax accounting, cryptocurrency focused softwares, it's all pain, no matter which way you get there. There's nothing we're going to be dump in, result kicks out. Unless you're just, on a Coinbase account, you're doing some swaps and trades. Yeah, most tools can handle that. But as soon as you start to interact more, you expand your journey, go a little bit deeper, really kind of thinking about what tool you're using really has a great result. And it does require, I would say, unfortunately, a little bit of elbow grease at year end. So looking where it may not grab like a bridge. So going from one chain to another chain, or it may not recognize a purchase, or for some reason the API key from a certain exchange just goes, and you got to find a way to figure it out. That's just the virtue of, we kind of live on these cusp of technologies. It's not like we're getting, Chase, Bank of America, Wells Fargo data into our QuickBooks or Zero account. So it's just a little bit different beast. And I guess like doing good research and finding the right tool that fits for you is very, very important.
I think I would just add to that for anyone who is starting this journey or anyone who is already there. It is all about keeping records, and it is all also about and I know it's difficult. I can attest to that, but whether it's daily, not maybe daily tracking, but note taking. So that way, when you need to gather the information for your accountant or tax preparer, you are able to go back, and then if you have made a purchase, all the information and the dates to refer back to. And I know different people who are professional probably are doing that, but for those that are casual like myself, I might be a little bit more lax. But it's really important as you're doing this to keep those notes, because they'll just help you, the preparer, for the questions, because otherwise we have to kind of go back. And with that being said, the other thing that I'm just going to mention to everyone, I'm one of the areas that I'm really passionate about is wills and a digital asset organization. I have created a book, which I'll leave the link in. But you and I were talking about, trust and other areas, estate planning. I think it's really important that even those that are new to this area think about the information you share with your family. Do they have access to the seed words and the access points? Because anything can medically happen to us in an emergency. We don't want to talk about it, but this is part of the planning that needs to happen, because if you are thinking about digital assets of any type, that's, in this world, it's different when you have a real estate property, your house, you can just tell your executor, sell it. When you're dealing with a digital asset, you really have to have a digital executor that understands the nature of the beast, and whether you want to hold the Bitcoin or sell the Bitcoin or NFTs or whatever it is that you have, because if they don't understand what it is you're dealing with, and talk to your professional, I'm pointing at camera, but because if you are going to be transacting in an estate and it's not done in the correct way, the taxes could be enormous. And so are you, what's your take on estate planning? I mean, again, I'm raising the flag here. So if people need to contact me, I can provide the resources, whether it's through me, the law firm I work with, or anything else, because this is critical. We ignore the wealth we're trying to create for our families, and then in an emergency, they don't have the benefit. So what's your take on that?
Yeah, I can touch on two aspects. Is one like the mechanics, and then second on like the tax benefits of doing this. Mechanics wise, this is something my wife and I identified very early on back in 2017. It was an issue, and then we had our first daughter back in 2019. So we're like, hey, we probably should get a will, and how do we handle these assets? So very, we went through this process ourselves. Was we set up our trust, we have our will and testament, and we essentially, like, as you'd have like legal guardians for your children, we have digital guardians. So there are instructions, there are people to contact that are aware of this. We have backup plans essentially in these assets because some of them are self-custody. So where to find it, how to get to these devices, how to actually operate it. Because you don't want to, throw that onto your spouse, your parents. They have no clue what the heck this is.
Or
It's
also
something that,
your child who might be a
or your
minor,
child.
who
Yeah,
there might be like you said, a guardian for your minor, but they might not have any understanding yet of the
exactly.
inheritance that is going to your child.
Exactly. No, and it's incredibly important to have that into place just because it's a lot of, I would say, cryptocurrency in general is very much my keys, my custody. It's all with me, 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 me. And there's a reason why, like, custodial solutions exist. There's a reason why there are wealth advisors, wealth managers, and family offices of service because they help maintain that wealth and preserve that wealth for people's benefits. So, like I said, the very least is like we have a digital guardian for our assets. So if unfortunately I kick the bucket, my wife knows what to do, or my parents would know what to do, my children would have access to have that wealth to provide for them. And then going into like certain tax strategies with it, I mean, we've set up just general living trusts, we set up irrevocable trusts, we've set up charitable remainder trusts. So we had a great example of this. We worked with a client, very early stage investor in a play to earn project called Axie Infinity. He bought in as an early stage investor for $5,000, $10,000, and then back during the height of the bull run, it was worth $7 to $10 million. So he took that, donated to a charitable remainder trust, and now he has that in a tax advantaged format. You get a nice fat deduction at the height of the market, and he also has something to provide for his not only himself but other future beneficiaries, people down the road, from that wealth creation. And because cryptocurrency is so volatile, and that when we're talking potential exponential earnings that could happen in the future, these are things you want to make sure not just yourself but your family, your beneficiaries are taken care of, so they can actually have tangible access to that wealth and not just lost away in some safe somewhere,
Yeah, no,
metaphorically speaking.
yeah, I agree with you. Any last minute thoughts that you want to share? I know for those that are listening, Cameron's actually going to be part of our Maryland Blockchain Association virtual meetup. So, definitely you can, those are free meetups that you can, register for and see all the different speakers. And that way you can also ask him questions, even though he won't give you advice. That is taxable advice. But anyway, any last minute thoughts that you want to share?
Yeah, we were talking this beforehand, Jackie, but I would say from our firm, Darn Advisors, we tend to be geographically agnostic when it comes to on-chain reconciliation, accounting. So that's why we're able to support DAOs in the Marshall Islands. I don't live in the Marshall Islands. But when it comes to like the actual boots on the ground, like compliance work, it's I am American, so US focused. We do a lot of work with UK, Canadian, New Zealand, Australian founders, and also people that have exposure to the US market. And I would say the best piece of advice or sage wisdom is the IRS, the ATO, all these tax organizations, they know that cryptocurrency is crazy, it's complex, they're trying to get their handle around it. The vast majority of taxpayers and citizens probably aren't managing well, they're probably under complying or just not complying at all. So do your best. When in doubt, if you get to a pause, find resources, find qualified guidance to get there. But when it comes to any sort of conversations with tax authorities, good faith underpins everything. You don't want to be seen as a malfeasance or bad actor. If you said, oh crap, I made a mistake on my return, I didn't mean to, that's a lot better than I didn't report that wallet because I didn't want to pay taxes. So the conversation changes, so showing good faith goes a long way, because at the end of the day, all these organizations are staffed by humans. You're going to talk to a human and they want to be understanding of your situation.
Yeah, for sure. Resources that you mentioned, individuals can go to the Blockchain Legal Institute. It is a centralized library of decentralized resources. For those of you that don't know, most of the pages are open source now, except for the law side. And the reason, and that's for members only. And that's because the laws are constantly evolving. So I want to make sure that it stays up to date. And for also, if you happen to be in Maryland and you hear this, for sure, look at the Maryland Blockchain Association. I want to know who you are so I can support you with information and also advocacy, because we're going to be talking to the General Assembly there to help guide them
Same.
on questions, because again, this is an evolving space and things are happening all the time. And one last plug, I'll leave the links for the books that I've written. Those are resources. I am constantly tweaking them because I see them when the printing comes out and I think, oh, I forgot this. So if there's some information that you need that's not in the book, just message me. I hope, even though I happen to be a lawyer, I'm also in education and I'm about providing the resources that our community needs. So Cameron, thank you so much for hopping on. I look forward to our next chat. And for everyone that's listening, remember what I always say, be kind to yourself, be kind to others. We're so interconnected. We're all part of one world and now more than ever. So everyone, have a great day. Bye.